Hello, YouTube. Is it time to sell? The S&P closed its first daily candle close below the 50 DMA. Big tech is selling off, notably Apple falling back below last year's high, and Nvidia, which is our leader. And we know that there is a 99% chance of a US recession, according to David Rosenberg, who was telling us that the bull market in stocks won't last and a recession is almost assured. This looks like a happy man, by the way, right? Please make sure to let me know if you think he looks happy. The veteran economist noted jobless claims just hit their highest level since October of 2021. So, looking at that data, we know that we have initial jobless claims coming out tomorrow, and it's likely going to be the last important data point for America going into the end of the week. That comes out at 8:30 tomorrow or pre-market. So let's look here at the graph he's talking about because he's saying the highest claims going back to going back to 2021. Well, it doesn't look all that bad to me. So if we understand the bull case, they're telling us there's a 99% chance this happens next. We can look at the indicator they are too, which is a recession, and maybe we don't see the same story. So that's what we want to talk about today. I hope you enjoyed today's show. Let's try to go through and see exactly what is going on because if we think about the price action, we noted that yesterday's sell-off was predicted. I talked about it. We watched the Russell. It could be a paper cut. It could be a deep cut. It could be as deep as 10%. It could be very harsh. Why? 1, 2, 3, 4 years in a row. 1, 2, 3 years in a row. We talked about how if it's not 2000 or 2008 or Brexit, maybe this time's different. We can actually close out a green month. But right now, that is in jeopardy. So we noted that we have our uptrend. We've now come all the way back down to test that. We're going to look at some charts a little bit later in the show. But let's give you a quick preview because I still see a bullish pattern inside of here or that inverse head and shoulders. And I'm noting that there's a very key area that we've talked about many, many times. Let's refresh ourselves on what that is before we look back at this daily chart here because it roughly corresponds here with our uptrend, which means if we lose this current uptrend, come down to the next level of support, I would expect to find buyers here at roughly 435. Why? When we look at our our weekly chart, and then at the monthly in a moment, we noted here that a 5% dip, then a dead cat bounce or an inside bar, the direction of that break was likely going to be the short-term trend. We closed right near last week's high, but failed to print a new one. Yesterday, we talked about how we failed at 451.76, which is a mathematical area, and QQQ lost it today as well. But looking at this monthly chart, this is where we could get a 4% crash, right? Stock market crash, dip, correction, pullback, whatever you want to call it. And we don't violate this pattern here, which means we can go down by 4% and we're going to hold a monthly higher low pattern, which led to a new all-time high. Did that lead to a new all-time high here? Well, if there's that 99% chance, we should not be dipping at all, meaning we should not be going down. We can also note here that the same uptrend we're looking here on the weekly is pretty much going to be the same uptrend I'm going to draw right here, just really fast. If we go back now, what used to be resistance or the yellow area is now turned into support. That's usually a very bullish sign. However, if we now come back down and retest it, is the buyers are already been exhausted? Because if we go down for a test of the uptrend right now, it's going to basically be a double bottom. So our low is 433.01. If we hit 433, like if we go there tomorrow, like that's basically the uptrend. The uptrend tomorrow is actually 432.8-ish. So that would mean a lower low on the monthly. And that would mean that we could potentially be going for a big crash. We know that 5 or 10% corrections are normal. They usually happen twice a year. And we've already gotten 2 so far this year. So if we go back here to our chart, we have to ask ourselves, okay, well, the move lower in February and the move lower we got now, if we try to think about this really simply, 1 cut, 2 cut. This is a 9% correction, and then we got a 5% correction. So technically, we've already gotten 2 so far this year. What's really important for me to think about is whether or not we're in a normal market environment, though. Why? Because this assumes that the market is normal. Look at that word right there, normal. Well, I don't know this market's normal. The drawdowns have been pretty large, and we've already had our 2. So theoretically, we should not get more. When we look here to our fear and greed, we're still inside of greed. The saying is that you buy fear, sell greed. So is this fear? Is this greed to sell? Or if we look here at our timeline, does this look like a dead cat bounce and then an attempt at a reversal? So 1 cut, 2 cut, low, higher, low, higher, low. It appears like it's a higher low so far. What I would want to see is more progress into deep greed, which would mean 60s, 70s, and then I'd like to see us back into extreme greed. Otherwise, there is a chance we could fulfill this. I would also note that the 99% chance of a recession coming next, we have to keep in mind how GDP is actually calculated. It's quarter over quarter, which is why we see a nasty drop in 2020 and then a violent recovery of 30+%. So next quarter, it's going to be harder to beat this number because we're over 5. And every time we get like over 3, right down to 0. Over 3, right down to 0. Over 3, right down to 0. So that could be what's coming next. That could be that 99% chance. All right, we're going to look at some charts in a moment here, but I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. We put out stock market videos every single day, and we would just really love your support. Thank you so much ahead of time. All right, so looking here at the heat map, we note that Apple is quite red, so is Nvidia, because these are our leaders, which went to new all-time highs. Let's quickly check in on those. Let's look at Apple first. So looking here at Apple, we did not quite make it into the gap zone. I noted this to our group this morning. If you want to learn more about that for a 14-day free trial to trade with me, Justin from YouTube, please go to our website, but I'll briefly go through my notes right now. So what I mentioned was that we got an inverse head and shoulders. We move our way up. We hit our 50 MA. We get a little bit higher. Don't quite fill the gap, going here to about 190.69. And then we crash, right? We lose our 50 MA or that blue line, getting one daily candle close back below, just like QQQ. But here's the important part. If you look at a 12-month chart, this is now a failed break again. Failed break means that we broke, but we failed to hold it. It's not by a lot. 182.94. We're at 182.91 on a close. But we want to make sure that if we know that we're not going to hold here, we could be going a lot lower. Could, should, maybe. There's a lot of conditions in here. However, Apple is the biggest stock. It's now 1 day below its 50 DMA with a pretty dramatic slide. It's 3.5%. Volume is elevated. That is notable to me. If we fall lower below here and spend a second daily candle close back below the 50 MA, that could signal a potential trend change. Trend change for what? Well, maybe a test of 177, which looks like a pretty solid shelf here, or that inverse head and shoulders neck. Can't hold that. Probably back down to the low. Can't hold that. Probably down to 165. That's what I would expect. It's not what I'm going to guarantee is going to happen. If we look over here to our weekly chart, it doesn't look all that bad. There's our hook. There's our up. There's our inside bar. Until we get a break, I would say that's consolidation. Just a big move last week. However, if we now look over here at QQQ, I want to note two different patterns. So the first pattern is that we stop going down. That's the big red line. The green line means we're going higher, meaning we're pointing up. But we noted that after we get over the moving averages and then crash land on the uptrend, what happens? Bounce, bounce. We're not really bouncing this time. So crash land on the moving averages. This time here, we had the golden cross, which is a leading indicator. And that's actually a bullish crossover. So that led to more continuation. But this time it didn't quite happen. We were looking for immediate move higher to a new high. We didn't get that. We got a lot of hollow candles in here, or all green, and we printed the new high, back tested it, and then went for the fresh expansion. I'm not sure that this time is going to be the same. QQQ is still over the 50 DMA, so if S&P closes below for 2 days, it likely implies that QQQ got dragged down. Why? Because I'll show you what happened today. Once we lost, we didn't actually even fill the upside gap. I was looking for that. We started fading, and then QQQ, after it lost this dotted line, it's at 375.66. It's the same mathematical number we're looking at on S&P, which we said failed yesterday, which was the crash signal. Well, look what happened, right? Boop, dead cat bounce. There's your inside bar. So if we're trying to understand, even short time frames can give us the same signals. So when we look here, what do we got? So our opening candle low, this 15-minute candle here, we know we get the big move lower. We blow to a new low of the day. We slice through the blue line, which you can see right here. We slice through that blue line, come back down, form an inside bar, right? We try to rally up. It gets sold off. We're exactly at that area, 375.64. It's off by 2 cents. Sellers appeared just below that area. And then after we lose that inside bar, then we go for the cut, go for the second cut, and then we form a bullish engulfing candle, the higher highs, the higher lows, and we start the reversal attempt. So as QQQ is attempting to get back up to this key area, if it's going to be that same chart we're looking at on the higher time frames or that inverse head and shoulders, we got to make it to the average, to that blue line, and then we got to get over, which means we cannot lose the 50 DMA. We did not quite test it today, but we got pretty close. There's no gap on the chart, but we're also closing below yesterday's low. So as of right now, I don't think this is repeating what it did before, even though we're still above the uptrend. We've not yet made a new high like we did over here on the expansion. So I'm not sure what the current pattern is. We look here to our weekly chart. It doesn't look terrible. I'm not going to lie. It is a potential head and shoulders, but we're still trending up. Bulls are still in control. We still have a couple weeks where we could flag out here and then decide if we're going to go down into October, decide if we're going to go up into October, or we get more of the same and we stop going up by just going sideways. So if we go sideways, we will stop going up on Monday, September 25th at the open of that week or the close of the month. So into the October 2nd week, you can just look at the bottom for the number or the date. October 2nd weekly open. If we're at the same price we are now or about 375, we've stopped going up. Stocks will generally go up, they will go sideways, and then they'll go down. So if we're going to go down, we're going to stop going up, which means sideways, before we ultimately decide to do that. It's the same thing when we're going down in the opposite direction here. So in the opposite direction, we go down. Let's actually be pretty clear. Right, down, arguably flat, and then back up, which means what? A massive cup and handle. So if we look at a higher time frame like QQQ, and we look here at a simple line chart, does the chart even look all that bad? Nope. Massive cup, massive handle, but it's only a cup and handle if we hold and we make a new high. What does that mean? We're looking for new all-time highs here. We need to see it. NVIDIA's over, and I actually forgot to check on that one. So let's actually go back to NVIDIA or NVDA. I want to see if it's above or below its 50 DMA, which it still currently is. Still looks bullish to me. Higher lows, right? We printed a new all-time high record close last week. Still looks fine to me. On the weekly chart, inside bar, new record close last week, over resistance, pretty bullish. 2 inside bars back to back usually means the coil's getting tight and it's going to explode up or it's going to explode down. I'm not sure which team's going to win. And then on the monthly chart, what do we have? We have a bullish engulfing monthly candle. Why? Earnings. So after earnings, we blew it out. They closed over the previous monthly high, and now we have an inside bar. So we've talked a lot about consolidation. But let's remind ourselves what that means. So an inside bar, after we get an inside bar or a dead cat bounce, which means a reversal attempt, we only get an actual reversal if we print more higher highs. So if we look here specifically on the S&P, let's now zoom in nice and close to make the story very, very simple. If we're going to go to that monthly low, meaning 435, it's going to be, let me actually double check and make sure I lay out the one extra thing here. So we're looking for 433 on the monthly chart. If you look here at our daily, if we hit that level tomorrow, it would be 432.8-ish. The next day, it's 433.50. The day after that, 434. So the longer we kind of just go sideways here, we would expect to find buyers on the monthly higher low. We would expect to find buyers on that uptrend, but we're not sure they will. So as we're looking at this chart, we want to be very mindful of that. Last thing I would note here is that we also have an inside bar on the monthly chart for the S&P. So monthly inside bar for NVIDIA, for QQQ, for S&P. Let's keep that in mind as we read this note now. So in a dead cat bounce, which is what we got because it's a dead cat bounce, it didn't make a new high. And then we have an inside bar, and then the direction of the break is likely the short-term trend. Our short-term trend is already up. But let's understand exactly what's happening here on SPY. Because if we're expecting the chart to advance right now, we're looking for offense or for an advancement or for an expansion. The only way that happens is if we see a pattern. First of all, we got to form defense. So we got our low established here, and then we got higher low, higher low, higher low, which means we have 3 higher lows, but the candle's not yet closed. Tomorrow's Thursday, then we got Friday. We're almost there, but we got 3 higher lows. How many higher highs do we have? High, lower high, lower high, lower high. Okay, so not there. High, higher high, and then lower high. So we got 1 higher high, which means the bulls have played defense 3 times, but they've only played offense once. Is it realistic? Do we expect a trend change or an advancement on the chart? If they've only managed to do it once, it's not a pattern, it's not repeatable, it's likely not going to happen. So with that said, I laid out a great weekend video you can now watch now on the left-hand side. If not, thank you so much for tuning in, and I look forward to seeing you on the next video. Thank you again.